Good afternoon, everybody. And this is Ying from Community CPA. And I will give you a minute to join the platform. And today we're talking about cryptocurrency. It's a very hot topic and a lot of questions around here. But today I am going to elevate that knowledge you already have and into a different level and give you an overall view of the reality when you have extra money and you want to do this and that and purchase currency, and what options do you have and how do you do it, and what is going to be your tax game and the accounting game. So I will explain that in a view that I truly believe it will be the webinar about virtual currency and you need to watch. So let's go ahead and I will share screen and start this whole process with you in no more than 60 minutes. I'm trying to make my webinar short because I know short is always better, but some knowledge has this connections. You just cannot break it. If you break it, you don't achieve that big picture. So let's go ahead sharing. Let me make sure what I was sharing and I didn't really pay attention to. Yes, I'm sharing my website and communitycpa.com. This is where you are going to know what kind of webinar we are doing, right? Today I'm talking about this cryptocurrency, but on Tuesday is also my webinar time, but it was going to be, always has been for a very short time. So 30 minutes or less. So during that one, I will talk similar things, but not cryptocurrency, but your losses on stock market or your losses in the cryptocurrency trading and what you're going to do with that. So, but today we focus on cryptocurrency. You can register, see right here into our webinar. Say you just got too busy, you don't have time to do that, no problem. We actually put all of our webinars in here as well. You literally can search any topic you want right here, folks. And then you will pull up all the videos that we had from the past. We have probably over 600 videos. Every videos are serious knowledge. We're not good at cracking a joke. We're not good at making it entertaining, but really, if you seriously consider something and you are a small business owner, but very successful, you need to come here because our audience are successful small businesses. And, small business is struggling. They don't have extra cash. They don't have ways to think of investing. All they're doing is trying to make the ends meet. And those are a group of small businesses that need a different help. But our expertise is for the small businesses so successful, you don't want to go to HR Blocks because they don't have the expertise to help you. And you also don't want to go to KPMG because they have so much to offer to you and you're going to be drawn with drawn in the charges. And I don't know, how much more they're going to charge small business, but obviously you don't go to KPMG for a reason. But Community CPA is a company that right in the middle. We are the one that cover the ground between HR Block to KPMG. If you think you are right in the middle, you're growing your business, you want to store your money into cryptocurrency, this is why you are here. Let's get going with what we want to talk about, right? So now I'm going to share screen with the PowerPoint that I have already prepared. Let me go to the PowerPoint. And if you notice that when we do webinars, we always do an introduction for the speaker, so for myself. And if you have not attended any of my webinars, and you will know that through this one and my little bit about my background. So our title is Cryptocurrency, Tax and Accounting. We are going to mention taxes, we're going to mention accounting. You cannot separate that. Even if you only do taxes, and you cannot walk away from accounting because accounting is literally the basis for your taxes. You must have some kind of accounting before you go on to taxes. So that is what we're going to cover. But I promise you, I'll make it so easy to understand. And I promise you, I'm not talking about debit credit. I'm not talking about 4797, all these code form numbers. I am giving you knowledge with Chinglish, easy English. That's spelled as YINGLSH. So that's why it's easy English. So myself, I serve on the National Taxpayer Advocacy Panel. That is a volunteer committee, volunteer position, and is a federal advisory committee selected by IRS. And there I am in the committee and providing advices to IRS and really bring your voice to there so IRS can become a better agency. They're already pretty good and they can be better. They can serve taxpayer much more efficient, right? So there's a lot of room to improve. And I have a book on Amazon. And if you're curious, this book is not boring at all. It is a story piled book. We have, at the time when I was writing that book, we have about 10,000 clients. And this is already almost 2 years. By the end of this year, it's 2 years ago I wrote this book. And by now we have about 20,000 clients. So this book is accumulation of our clients' experience. Of course, I don't give you the client's real ID and the things like that, but it is a story compiled by practical experiences. Talk about people, how they start business, all kinds of ways to start a business, whether you have a social security number or IT number and your student visa, whatever you were talking about, and we covered all in that book. And then, of course, I'm writing the second book is growing the business. So those information we talk about in the videos, in the webinars, is kind of a content for the second book. So my goal is get that rolled out this year. So that's my goal, right? And here, before I dive into the information, no responsibility disclaimer. This is internet presentation. I don't know who you are when the video is out. So when you take the presentation, listen to what I say, verify with what's going on at that time. Knowledge do go outdated. However, the history does offer values. So especially tax history or economic history, finance history, those are literally woven into today's situation. So there's no cutoff from the past to present, but still take responsibility, your knowledge age, and do not listen to a webinar I was doing 2 years ago, then tell me that that was not right. I literally had an audience and wrote me an email and told me that that webinar, what I said was wrong. And then I noticed that it was wrong because the rule changed, but that was like a year ago. So the person who listened to the webinar wasn't sensitive to the time. And you want to look at the time stamp, right? On the YouTube channel, under the thumbnail, it always tells you the video was uploaded. Our video is always uploaded 24 hours after our webinar, so you can literally know the date. So that way helps you to only get current information, not outdated. So let's talk about crypto. English is my second language. Cryptocurrency is not a word I even knew when I study English, right? So probably you will say that's the same thing with us because cryptography is kind of computer language and made this currency using blockchain technology. So they call that cryptocurrency. It doesn't matter what they say. And let's just be clear. Cryptocurrency is a virtual thing. It's digital, right? So let's just briefly understand it. And it started in 2009, folks. It is started in our lifetime. Started in like a 100 or so long time ago, right? Our real currency, the one we have, our green bill, those are coming from our country, and you can touch it, and it's centralized or representative, like in US, it is Federal Reserve. And who issues those currencies? They are the only one can print it, right? And if you see a lot of new currencies in today's world because of the inflation, it's because Federal Reserve have the machine running very fast. So they're printing currencies. So those are guaranteed by the government. And those are government controlled. And cryptocurrency, it is privately controlled. Did you hear me? Yes, it is privately controlled because the company who invented this computer programming to create coins, create tokens, and they making sure the integrity is there. They are the one making sure that they're not going to inflate that currency. So when I say private, have a thumb on it. The government have no control, and that currency can go to zero tomorrow, and you don't have a body like FDIC. Remember, cost, and then there's the FDIC insurance, and you can still recover 250,000. You remember that? And it doesn't exist in the Bitcoin world, right? So with that, and I want you to kind of know and the couple characteristic. So Bitcoin and those virtual currency are a specialized computer code by a private held company, and they have their own integrity, their own security, and to make sure the blockchain is has reflected the real economy. And so there's nobody going to go there and to inflate the creation of the coins, right? So these are privately regulated, and it's not like our US bill, and it is not changeable. Bitcoin is not tangible. And if you bought Bitcoin in your company, I will give you a couple slides on Elon Musk. Okay, I actually wrote about Elon Musk, and back in 2019, he is such a he's an amazing entrepreneur, right? And he has this background, and I really admire. And he is creating Tesla at the time, and he had bought Bitcoin, and you probably knew that. So let's look at the Bitcoin currency as an intangible digital token. And so this slide, don't even go there. So let's look at this. So let's study Tesla. Bitcoin. And as a result, Bitcoin value went up significantly, okay? And % up. But in March, and Tesla Bitcoin, and I was actually the quantity they sold, and I couldn't find the quantity, but they reported $128 million gain. And Tesla is a public company, so you can actually see their financials on the internet. So they reported $120 gain. And when they report that gain, they will reduce their intangible asset, and then they will increase their income. Okay, so their shareholder will enjoy the higher dividend because of the sold of the Bitcoin. In December 2020, he reported on his book, his Bitcoin worth 1 point, and on the balance sheet at the end of 2021, but on the income statement, it has a 101 million. So that means the intangible asset Bitcoin out Bitcoin by a big chunk. Bitcoin actually come down and the value went down. So he wrote off investment by 101 million. So it's sort of offsetting that $28 million gain. Am I right? So this is where Tesla's activity. So I want you to see a chart. So this is the Bitcoin chart. Okay. And the Bitcoin value jumped, and it jumped by this much from the time when they bought it, right? When they bought it, it was around 30. So went up by 13,604. So this is where the Bitcoin impact absorbed by Tesla buy. All right. So now I want to introduce to you a concept which is important for our well-doing small business owner, because you might have cash that you want to invest in cryptocurrency. But when you invest in cryptocurrency, and I will do a draw chart later, but right now I want you to understand that in the accounting world, and when you buy intangible asset, when the asset go down in value, and you will reduce your income for that. Because let's say you bought for $100 intangible Bitcoin value 100, but by the time you finish your year, that become 100 become $10. So your balance sheet for $10 to represent that asset, and your income statement would have a $9 write-off. What if you only year? What that mean? That means you don't pay taxes, right? And you write down your Bitcoin loss right there, even though you didn't sell it. You didn't sell it. You were just holding intangible asset. This is in business world, that is how it works. This is at cost method for business, counting that as intangible asset. And the write down what I was talking about is an imperative adjustment. As subsequent impairment testing resulted in, but basically tells you that if your intangible asset devalued, you want to take that devalued value and the difference what you bought for and what it was valued right now, and put that on your income statement and make your cost, your expense, then you will be having less profit. So my last slides before I go into my drawing board is this. This is where I want to talk to you. I know you are a successful small business owner. You want to invest in cryptocurrency. You talk to me and I have heard too many times. So I always go into here to start talking about investing. I'm not a financial planner, so I don't give you advice in terms of whether you should or not. But if you did, this is the choice you have on the accounting tax side, right? You either buy the Bitcoin as part of an intangible asset for your company, or you buy it as your personal investment. Am I right? Two ways you can buy it. You either buy it with your name, or you buy it with company name using company dollars and treating that as a drawing board. Then I will lay it out for you and what that means to you in these different ways. All right, I will stop sharing the slide, and now I'm going to share you my drawing board. Where is my drawing board? Okay. All right. All right, now I'm here. So this is my drawing board. Let's just go from here. So extra money. I know you made extra money. So this extra money can be invested two ways. We can come up a check to buy Bitcoin from company account. We can also do from personal account. Okay, so now I'm going to the company first. So you remember Elon Musk's story, right? So what happened is, and I bought Bitcoin. Let's say we pretend we use company money, bought $100,000 worth of Bitcoin. So with that, what I do is in the company book, I increased my intent. And I reduced what? I reduced my bank balance because bank account, I reduced bank balance because I used up the 100,000, right? So that is when you buy. and you did not sell it, and you just left it on the book. But on December 31st, 2022, and then you need to do your financial statement for tax purposes. But Bitcoin had dropped in value. What you bought at that time, it dropped to 10,000. It dropped. So what you will do is you will reduce intangible asset. You know, I use this fancy word, but you can just call it Bitcoin. I just write it as Bitcoin, but the treatment is intangible asset treatment. All right. So now you reduce that. You reduce that by how much? 90,000. But of course, you want to have some sort of proof. Right? You cannot just sit here, dream it up, and you must have a statement of some sort to prove the value did go down. And now, and you are going to increase what? You're going to increase your expenses. It is not like your utilities or your materials. It's not that kind of expense. It is what we call imperative loss. Went down by value. So this losses from the intangible asset, from the Bitcoin, you can loss from Bitcoin. Right? Then you got the losses. That's a 90,000. So let's say in the year, and your income is 90,000, and your expense of other things are 10,000. Now you suddenly have another expense coming in. That's 90,000. So what happened? Your taxable income is what? Equals to minus 10,000. So is your tax equals to what? 0, right? So that is what that is. So this is when you use company account to do Bitcoin investment, and that is how you are doing it. And it is treated as an intangible asset, and it is giving you the opportunity to write it down. But you're going to say, okay, Ying, what if I didn't lose? Actually gain. And what am I going to do? And if you gained, so your 100,000 become 200,000. As long as you did not sell. You did not sell. Your income do not increase. You just hold that value and you don't do nothing. You only will reduce your income when Bitcoin drop in value. So that is where some of the public company like Tesla, the shareholders are not happy, because when the coin going up, they don't recognize the gain. But when the coin's going down and the imperative write off, and so the gain going down and the dividend going down, right? So that is where the accounting right now, this is how it works. So for my well-doing small business owners, and did you see a way to invest and also to enjoy and also to not to be so worried about? It is not a bad idea to invest in cryptocurrency because of what I just explained to you right here. Okay, now let's look at personal. Let's look at what happens in personal way of investing to Bitcoin. All right, so I'm going to list 2 ways. And remember, in terms of investment, You could be qualified as a day trader. You could be qualified not a day trader, just a investor. So I'm not talking about the investment company, right? I am talking about you, me as an individual. And when we want to play with the investment market, we can make ourselves day trader, qualify ourselves as day trader or not, right? So I'm going to go for day trader first. So if I'm a day trader, I have done an election to be a day trader. So the timeline is I must have done election in 2021 when I file in 2022 when I filed the 2020 1040. So I have 2022, okay, folks, just this April. You must file an election to elect yourself to be a day trader first, right? And then what happened is, and your brokerage firm would change your statement from 1099-B for into a statement called 4787. You are doing mark-to-market election. Filing in 2022. In 2023 for 2022. So I just want to say that applies to cryptocurrency. So you buy and you sell, and when you go through the election process and your buy and sell, it will not be qualified as capital gain and loss. Capital gain or loss, it is actually a regular gain and loss. So this is what day trader is going after. Why would day trader want to be a day trader? Because their capital loss is limited for $3,000 per year on deduction. So what if you lose money for $3 million in 1 year and you are going to deduct out of the $3 million for how many years? You don't even live long, right? So if you are going to have a $3 million loss as a capital loss, the only hope for you to get that recovered, if it is you have a capital gain of 3 million coming in later, so it will offset really quickly. Otherwise, you stuck with $3,000 a year kind of spit. That doesn't do. There's who has the volume of trading, and they want to treat the gain as an ordinary gain, loss as ordinary loss, so they can run like a business, right? Like a business. So this is what cryptocurrency would give to you as well. And you can elect yourself to be a day trader for that, or you just be a regular investor. It's okay if you're a regular investor and you will be buying and selling, right? And know that if you buy it and you sold it too quickly, less than 30 days, less than 365 days, they are short-term capital gain. Short-term capital gain pays on the regular rate is 0% to 37%. Depends on how much money you make, right? So the capital gain is like oil on top of the water. So it taxed at the rate for you, just depends on how deep your water is. So let's say if you make over $500,000 a year, your capital gain will be taxed at 37%. But if you make less, it will be taxed at from 0 to. But let's say if you are selling it greater than 365 days holding, greater. your long-term capital gain. Long-term capital gain, the top rate is 20%. So long-term capital gain is 0%, 15%, and 20%. So if you have AGI, all total income is over 500,000. I just told you for short-term gain, you have 37% rate, tax rate for the federal. And if it is long cryptocurrency, after more than a year holding, and then you suddenly pay 20%, which is 17% less than what you otherwise would pay. So if one day makes difference, you want that day to be that, right? To make your investment be a, this is where the investors on cryptocurrency, that's how your tax is going to work. And you may tell me that, okay, Ying, you are not right because, you know, I invest in cryptocurrency. I never got anything. I don't have anything. I don't even know how to report my gain and loss. And let me tell you, because it is not being regulated. So Bitcoin are still in the gray area in terms of the IRS regulating. It's not like your IRA investment. It's not like your other investment you have and the stock buy and sell. You get the statement from each way. It's all pretty clear. But Bitcoin, when you work with some brokerage firm and they don't care to be to give you that kind of statement, they may not even be a US company, so they don't have to go for US rules and regulations. I'm sorry. If that is the case, then you really, and when you don't have anything, but you are a taxpayer in US, so you're responsible for providing the same level of report that E-Trade would give to the IRS. So you must have it somehow. So make sure you actually document your buy and sell carefully. Okay, so what do you think about this chart? So let's just kind of summarize it. You know, I always want to explain the knowledge at a little higher level than someone tells you that, oh, you just need to give me 1089B, so I will know what to do. Or someone tells you that, don't worry about it, the IRS don't know anything about it. So all of these are a situation, but where that situation comes from, that is where I like to situate our understanding. So as a small business owner, especially the successful one, when you have extra money and with inflation going the way it is, with the real estate market, it's just not helping, right? The price rising and what you can buy before is not what you can buy right now. And you're just kind of sitting on your money and thinking, what else should I do? And a lot of you are thinking about virtual currencies, very natural. And I can see people, you know, we have 12,000 clients. So if I don't see a big economy, I see my small economy here. And I see my successful small business owners, what they are doing. So in this talk I want you to make a conscientious decision. When you invest in virtual currency, are you investing under a business account or you are investing under personal account? Both are okay. Both are your choice. Of course, if it is under company account, you make money, the company still have to run through for taxes, right? If your company is a C corporation, and then you will be paying 21% of corporation tax for the gain you got on the trading. And you can also think of, okay, fine, and I want that to be my personal. And on your personal, unless you invest your virtual currency into your IRA account and Roth IRA account, and you would have to pay taxes when it's come out, especially if you made money. If you lost money, deal, and you have the losses, the last year that you can roll it out. And if you don't do a day trader, and if you don't do mark-to-market election, So when you did a mark-to-market election, in my example I was talking about, then you must be qualified to be a day trader. You may ask me that, oh, Ying, how do I qualify to be day trader? And there's no regulations there saying that you qualified for a day trader. No, there are tax court cases to make a determination of how a person could be regarded as a day trader. So I would tell you that if you have no other job, you just trade, then you are a day trader. If you have other job, but you traded million transaction, and every day you are trading and you are trading short-term gains, all of it is short-term gains, then you are a day trader. So you need to qualify yourself whether you are or not. If you are a day trader, you can do mark-to-market. Otherwise, you should not be doing that. Mark-to-market is just another accounting method. It is like a cash method, accrual method. Mark-to-market, especially for investment to market, means that even if you didn't sell, and we will count that as a loss or gain for you at the end of the period. So with that, and you pretty much got a big picture of what you need to do when you have a lot of money. And I want to conclude this webinar by saying that whether you invest in virtual currency or not, that is your decision. It is how good your financial planner or people who are trying to intrigue you to buy those kind of investment, how good of a job they do. They might just convince you. I just had a client last week come to me and spend $269,000, bought virtual currency online. And after she paid all the money and she cannot find the website anymore. Okay, so the scam is out there, and you really want to do due diligence before you put your money into virtual currency, because that product is already intangible. It's already cannot feel and touch. And now you find some wacky website to go on to and relying on some virtual person you have never met. Good idea. And you want to make that decision. Once you made that decision and you come down to this chart, you decide on where the money comes from. If it is the company, that's the treatment. If it is a personal, you have different treatment. Then you can be a sounded investor for your money. So I will talk to you again on Tuesday, and where we talk about losses in investment. So we'll lay out the landscape of how you can deduct, where you deduct, ways to deduct it of your investment loss. Normally, is carved at $3,000 a year, which is really not helping that much. All right, I will talk to you again. I hope you did learn one or two, and I do my very best to make webinar very short and condensed so you can get your knowledge in as quickly as possible. I'll talk to you again. Bye-bye.